Hey there, Craig Johnson, Canopy Mortgage. Listen, beautiful home in Rolette, Texas. Have an opportunity to make this home much more affordable by using some financing options that are absolutely out of the box thinking here. So what we're going to do is give you one idea. There are many different ways to put the puzzle together. This is only one, but it definitely gives it the opportunity to impact the two most important things: monthly payment and cash to close. So let's dive right in. Option one is the original price at $575. Seller did a $25,000 price drop recently, so the price became $550. And then I go to option three, and this is where we're holding the price at $575, but we're going to use $17,000 in a concession and be able to lower that monthly payment, and you'll see that here in just a second. So that's where we're at. So we come down here, and again, we're doing conventional lending, and then the last there on option three is the conventional lending with the temporary buy down of a 2-1 buy down. And what that simply means is we're going to start at the market rate, in this case 6.875, and in that very first year, 2% lower in rate. So 4.875. Then the second year, it goes to 5.875. And then in the third year, it gets to 6.875. Side note, I think there's going to be an opportunity to refinance that loan here over the next 18 to 24 months. So I really don't think you're going to hold on to that 6.875 at all. So with that being said, let's look at monthly payment, because that's where the rubber meets the road. So $575, option one, monthly payment $35.88. $25,000 price drop, a lot of money. Principal and interest, that's what we're looking at, because taxes and insurance say the same. The principal and interest, $34.32. Just a little over $150 a month in price reduction. Again, $25,000, big number, right? You would hope that that monthly payment would become lower, but because the loan is amortized over 30 years, it just doesn't have the impact that we would think or want. Now, if we go to option three and we use that temporary buy down, we can lower that first year payment to $28.91 compared to $35.88. Just a smidge under $700 a month. Big, big difference, right? So that definitely can help that home become more affordable today. And then we're going to jump right into cash to close. $43.41 on option one, $42.113. So again, that $25,000 price drop doesn't really impact cash to close, but that $17,000 concession absolutely will reduce the cash to close down to just about $39,000. So all good things here to take a look at and consider. Many options to choose from. Would love to have a conversation. Please reach out to the real estate agent. Joey and I would definitely love to help you in any way. Put the transaction together so the buyer, agents, and buyers take a look at this. There's definitely ways to solve affordability. Thanks again. We'll talk to you soon. Take care. Bye-bye.